Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at my 5 top stock picks if you're looking to invest $1,000. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we're going to discuss my top 5 stock picks if you're looking to invest $1,000. Now, to be honest, that $1,000 is a trivial amount, as this can apply to $100, $500, $1,000, $5,000, whatever it is that you have, but it is a question I get asked really often, as we have a lot of investors who are new to the market looking to start out and they just want to know where on earth to begin. There are thousands of stocks to pick from out there, so where do you start off with in your portfolio? Now, personally, I am a big believer in diversification and setting up a solid base in your investment portfolio. So today we're going to be taking a look at a mix of growth, blue chip, and dividend stocks. Now, one thing I want to address before we get right into these companies are fractional shares, as some of these company stocks cost several $100s. So depending on how much you have to invest, you might not be able to afford an entire share, but that is okay. Many brokers and investment platforms allow fractional shares now, where you can just invest what you can afford into this company. You still will benefit from all of the growth and dividends from that company, just at your fractional percentage. Beyond that, I would highly recommend setting up a DRIP or dividend reinvestment plan to make sure any dividends being paid out are getting reinvested to continue growing, and also setting up your own regular investment plan where you have an automatic amount being invested every single week, 2 weeks, every month, whatever it is that works for you. But having that regular contribution to your investment account is going to really help you benefit from dollar cost averaging and compound interest growth. Now, this is just your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links we have in our description. This includes a link to TipRanks, which is my favorite resource for looking up stocks. Their free plan has a ton of great content, but the premium and ultimate plan come with a ton of extra perks. So if you're thinking of signing up, make sure to use that link down below so that they know I sent you. All right, now let's get right into these 5 companies. And spoiler alert, you're probably going to recognize a lot of these companies already, as they are big, well-established businesses set up for some great future growth. And the first stock we're taking a look at today is Visa. They trade under the ticker V and are currently just above $200 at $201.76. Visa also pays a dividend, which is currently 31 cents quarterly for a 0.63% dividend yield. And their next ex-dividend date is coming up on February 11th with a payment date on March 1st. Now, Visa is best known for facilitating electronic fund transfers across the world, mostly through their Visa-branded credit cards and debit cards. Their strategy for the next 3 to 5 years is to accelerate the growth in their revenue streams and fortify Visa's strong foundation. And this includes expanding into new arenas as well, as they just announced a partnership with First Boulevard, a digitally native neobank focused on building generational wealth for the Black community. Now, First Boulevard will be the first to pilot Visa's new suite of crypto APIs, which will enable their customers to purchase, custody, and trade digital assets held by Anchorage, a federally chartered digital asset bank. And we know crypto is a huge growing trend right now, so it's interesting to see Visa jump into this. Now, there are currently 17 analyst ratings on the Visa stock, and it comes in as a strong buy based on 15 buy ratings and 2 holds. The average price target is $241.69, which would be nearly 20% growth over this next year. And those ratings come from well-rated analysts themselves, and many have been updated just in this last week. The next stock we're taking a look at is Salesforce. They trade under the ticker CRM and are currently at $235.45. Salesforce is definitely still in their growth phase of business, so they do not pay a dividend at this time. But they are the world's #1 customer relationship management platform, or CRM. Their cloud-based CRM applications for sales, service, marketing, and more don't require IT experts to set up or manage. Simply log in and start connecting to customers in a whole new way. And more than 150,000 companies use Salesforce CRM to grow their businesses by strengthening customer relationships. Now, there are a lot of analysts that cover the Salesforce stock, as we have 28 ratings in the last 3 months. And it does come in as a strong buy, with 21 buy ratings and 7 holds. The average price target is $275 for about a 17% potential upside. And again, those ratings come from very well-rated analysts. Now, we do have one hold at a $225 price target, but we also have a buy at $315 for over 33% potential upside. Next up, we have the very well-known Microsoft. They trade under the ticker MSFT and are currently at $244.75. Microsoft does pay a dividend at 56 cents per share quarterly for a 0.94% dividend yield, with their next ex-dividend date coming up February 17th for payment on March 11th. Now, obviously, Microsoft has a very well-known reputation in the technology world, but they do have a few newer things that are working really well in their favor lately. First is that their Office and Xbox continue to grow, and the transition of Office to a subscription service has worked wonders for Microsoft's core software business. In the second fiscal quarter, the segment revenue growth remained consistent, growing 13 or 11% excluding currency changes. Microsoft now has 47.5 million consumer subscribers to Microsoft 365, which is up 28% year over year. And their Xbox content and services revenue grew an astonishing 40% year over year. The second is their cloud services, and the most important reason to invest in Microsoft is growth in the cloud. Microsoft Azure experienced a small acceleration in growth last quarter, with revenue increasing by 48%. One analyst expects Azure to exceed both Office and Windows in annual revenue by just next year. And the cherry on top is their free cash flow and dividends, with Microsoft's lucrative software business churning out high profit margins and free cash flows for many years. All of that leads Microsoft to have 24 analyst ratings that all come in as a buy. And that strong buy rating comes with a $280 price target for just shy of a 15% potential upside over this next year. And once again, those ratings come from very highly rated analysts themselves, with most of them updating their ratings within this last week as we saw their earnings come in. The fourth stock we're taking a look at is another very well-known company, and that is Apple. Trading under the ticker AAPL, their stock is currently trading at $134.61. Apple is obviously extremely well known for their lineup of products, including the iPod, iPhone, iPad, Mac, MacBook, all of those. But the company certainly continues to move forward in the technology space, as we're hearing rumors of an iCar somewhere in the future. Now, Apple does pay a dividend as well, and it's currently 20 cents per quarter for a 0.61% dividend yield, with the next ex-dividend date coming up here quickly on February 5th for a payment date of February 11th. And the Apple stock has 28 current analyst ratings. And it comes in as a moderate buy, with 20 buy ratings, 6 holds, and 2 sells. The average price target is $149.19 for just above a 10% potential upside. Many of those ratings were updated in this last week, coming from plenty of 5-star ratings on TipRanks. And the last, but certainly not least stock, as it's actually the most expensive stock on the list, is NVDA. They trade under the ticker NVDA and are currently at $545 per share. And before you freak out at that price point, just remember, fractional shares. NVIDIA is the pioneer of GPU accelerated computing, and they specialize in products and platforms for the large growing markets of gaming, professional visualization, data center, and automotive. Their creations are loved by the most demanding computer users in the world, from gamers, designers, and scientists, and their work is at the center of the most consequential megatrends in technology. The NVIDIA stock carries 18 current analyst ratings and comes in as a strong buy, with 14 buys and 4 holds. The average price target is $608 for about an 11.5% potential upside. The most recent rating actually just came today from a 3.5-star analyst at New Street for $500, which would be about a negative 8% potential downside. But in the last month or so, we have seen some very favorable ratings. The highest is actually $700 from a 5-star analyst at Needham, which would be about a 28% potential upside. And I forgot to mention earlier that they do pay a dividend as well, which is currently at 15 cents per quarter for a 0.12% dividend yield. Now, they most recently paid out on December 29th, so we're a couple months away from the next one. So there are my 5 picks for starting off a really strong foundation for your investment portfolio. These companies all have great buy ratings, some healthy potential upside in their future, and most of them even pay a dividend. What's great though is that these are all well-established companies with massive market caps that aren't going to fluctuate wildly anytime the market shifts. These are perfect stocks to just set and forget, continue contributing to month over month, and just watch them grow year over year. Now, obviously, there are way more picks than just these 5 that make a great, solid foundation for your investment account. So make sure to leave your thoughts down below in the comments on what some of your long-term favorite picks are. Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Always make sure that you're doing your own research and due diligence before making any investment decision. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.